We've been investing in microcaps as part of our small cap strategy for over 10 years, and it's always been an area that the team and I loved investing in. We love that under-researched nature of it, finding those hidden gems before the rest of the market. So while we've always been doing it, we've never had a dedicated product for it before, so we decided to launch the Microcap Fund just over a year ago to give our investors direct access to this skill. Well, we define microcaps as stocks below 500 mil market cap, and when you look at the ASX today, that's over 2,000 companies that we can invest in, so it's a huge universe. What we love as a team about microcaps is the under-researched nature. Being such a big universe, 2,000 stocks, it's very hard for brokers to adequately cover that. So we've got a very big investment team, and we can go out and do our own proprietary research and build up convictions in these names. What we also like is it's a very diverse universe. So unlike large caps, which are dominated by banks and resources, there's a huge range of sectors in microcaps. So for example, anything from medical technology, IT, to agriculture. So if there's a sector we like, we can generally find it in microcaps. Well, Perennial Value is a very large organisation, over 5 billion in assets under management, and that gives us great scale to be able to invest in the investment team. We've got 6 investment professionals plus a dedicated dealer for this product. As I said before, we've been doing this for over 10 years in our small companies products, so we've experienced and we've got a very disciplined value process. I think that's important in microcaps because it's a more speculative end of the market. The risks are higher, so by bringing that value approach, you really reduce the risks for our investors when they're investing in this space. So the fund, we like to spread our risk in microcaps, and so we have about 60 stocks. We also have the ability to invest in pre-IPO opportunities, and so that's unlisted companies that are likely to list within 12 to 18 months, and we think that's an important differentiator for this product. The perfect stock for us, we start with management. Management are very important at this end of the market, and we're looking for management to be aligned with us as shareholders. So typically that means they've got a very big shareholding in the company, and so we know that any actions they're making are in their own best interest and our best interest, being shareholders. So that's number one. Number two we look at is the balance sheet. At this end of the market, we really don't like debt. Over half the companies we own have no debt at all, and that's important to reduce risk, number one, but also to give the companies optionality for growth if a good acquisition comes along or growth capital. Finally, we're looking for companies that are able to generate growing cash flow over the next 2 or 3 years, and we'll model that up. And at the end of it all, we want to make sure if a company's got all those attributes, growing cash, good management alignment, good balance sheet, we don't want to be paying too much for it because we're value managers at the end of the day. So at the end of the day, we're picking 60 stocks that have all those characteristics but are also good value. We're very pleased with our first year of performance. We did over 50% net of fees in the first year. What's also pleasing is we did it without taking undue risk. We had over 60 stocks in the portfolio, so the returns were spread from a number of sectors and a number of stocks. What really excites us about microcaps is there's always one area or more of the market that's growing, and we've got such a broad choice. So for example, last year, the turnaround in mining services was very positive for our performance. More recently, some medical technology companies have performed well for us. Looking forward, it could be agriculture or IT that drives performance for our investors.